Vehicles in China, NIO Incorporated has attracted interest from investors and consumers thanks to its distinctive battery service offering and strong brand. But in comparison to Tesla, which is currently leading the worldwide EV market, it's still a little business. PEG ratios are a useful indicator to compare growth rates, but since NIO does not presently have access to those numbers, we will be examining alternative variables instead. Like Tesla did when it was a smaller company, NIO is now concentrating on its home market, but it is also making an effort to increase its market share elsewhere. Tesla, on the other hand, has a competitive advantage because it is already well established internationally and is still growing. The company is actively exploring new markets, including India, where the electric industry is growing as a result of global government initiatives and hospitable regulatory frameworks. A lot of the gain in Tesla shares has already been built in, but that might be justified if NIO can match Tesla's performance. However, what are the odds of such occurring? Let's examine the figures. NIO, a company founded in 2014, currently produces three high-end electric SUVs, the S8, S6, and X6. While NIO started out with about 50,000 vehicles, it delivered almost 20.5K cars in 2019, an increase of 81 year-over-year, and we expect an increase. In contrast, Tesla's vehicle deliveries increased by 50% to 368 in 2019 and further increased in 2020 due to the launch of its Model Y and the opening of its Chinese facility. Once regulations and certifications are obtained, we expect production to commence at Tesla's new German factories shortly after production at the Texas factory. This is because the company hopes to increase its annual production capacity to 2 million units. In terms of manufacturing, NIO still has a long way to go before catching up to Tesla's Shanghai factory alone. The company, on the other hand, has a plan. It started increasing manufacturing capacity last year with the aim of reaching 300,000 units annually and wants to debut new goods in 2022. It's a start, even though this won't match Tesla's China production output, although authorities in China and the US will put pressure on Chinese equities in 2021. There is still the problem of regulatory uncertainty with regard to Chinese stocks. China's government has taken action to restrict the influence and expansion of fintech, internet, gaming, and educational businesses. International investors are naturally apprehensive about the Chinese government's next move, even though Chinese car stocks have so far escaped the wrath of Chinese regulators. In addition, the Securities and Exchange Commission of the United States recently announced a new rule that would delist any Chinese stocks that failed to meet strict new audit criteria, contributing to the regulatory uncertainties surrounding NIO. Tesla, on the other hand, is in a different situation because the U.S. electric vehicle sector was founded by an executive order that President Joe Biden had previously signed. By 2030, 50 plug-in hybrid and electric hydrogen fuel cell cars are expected to be sold in the U.S., according to the directive. To do it, the government is depending on funding and policy initiatives. It aims to raise the fuel efficiency requirements for major American automakers' 2026 models and has already allocated $7.5 billion toward the $1 trillion infrastructure package that is presently being voted on by the House to fund electric vehicle charging stations. Tesla leads the car sector in the U.S. because it has the strongest brand recognition of any automaker. This can only mean positive things for the brand in terms of sales, increased awareness, and general expansion. In the third quarter of 2021, NIO recorded a net loss of $835.3 million, an increase over the previous quarter's $587.2 million. The Bank of America has given NIO stock, which closed at $29.30 on January 9, a buy rating and a $66 price target. NIO is expected to experience a net loss of $2.8 billion in 2022. As interest rates rise, it will become more expensive for unprofitable businesses like NIO to borrow the money they need to expand. At some point, in order to be fair to investors, NIO will need to show that they have long-term, profitable business models. Tesla did not turn a profit right away either. In 2020, it made a profit for the entire year for the first time in its history. Common stockholders received $721 million in net income from Tesla, while non-controlling interests received $141 million. Nevertheless, now that the company is making money, it is unquestionably a safer bet, and investors may be more confident about what the future holds in general. While NIO's recent explosive growth and creative concepts, such as a car battery subscription service that lets customers buy car batteries without having to pay full price, are exciting, we believe it to be a riskier investment than Tesla. NIO is concentrating on the fiercely competitive Chinese electric car sector, which is home to hundreds of manufacturers. NIO will find it challenging to quickly increase production. It will be interesting to see if the business can increase output without sacrificing quality. Despite the fact that Tesla stock might seem expensive, they recalled over 5,000 vehicles last year in response to allegations of multiple fires. NIO may offer a lower margin of safety than the company due to its highly recognized and valued brand, industry-leading innovation software distinctiveness, and quickly increasing profitability. Tesla's business plan seems appealing, and as battery prices decline, profits should continue to rise. As self-driving capabilities advance, operating leverage increases and could lead to software sales. And last, some investors are debating whether Tesla can survive the pressure from less expensive, but just as capable rivals. This is comparable to comparing Apple to other high-tech cell phone manufacturers, even though there are now many affordable and comparable options on the market. Apple is still important, and its price is appropriate. We think Tesla will do the same, holding on to its status as the industry leader in spite of the availability of other options. Which stock, Team NIO or Team Tesla, or both, would you choose? The top electric car brand, Tesla, seems to be the subject of constant news, and today we'll be concentrating on a few specific topics. In an interview, Ron Barron brought up the business and its contentious CEO, Elon Musk. Ron Barron is an American investor and manager of mutual funds. He is the creator of Barron Capital, an investment management company. He discussed the stock's advantages and disclosed what he saw as its main flaw. What is the largest immediate risk facing Tesla? In today's video, we'll go into that in great detail. Watch through to the very finish. Ron Barron has been a long-time testable and firm believer in the brand, seeing accelerated growth in 2020. He was rewarded for his faith, as he saw over $3 million in returns as far back as 2016. Barron had stated that he saw Tesla becoming one of the world's top corporations, and that his fund will keep the company's shares for the next 10 to 20 years. That same year, his Tesla investment was worth roughly $300 million, and the fund took 3 years to accumulate, holding at an average cost of $210 per share. He said that in 2021, his investment in the electric car maker had yielded a $6 billion profit, and that he intends to stay a stakeholder for at least another 10 years. He also mentioned that he pays frequent visits to the factory virtually every quarter to assess how things are progressing, which makes him no stranger to the in and out of the firm. He has stated that he considers Elon Musk a hard-working and brilliant visionary, but was apprehensive when he first met Musk 10 years ago about whether Tesla would succeed, and that it wasn't until the company started producing the models that his investment firm started buying Tesla stock. He currently feels that established manufacturers were a problem 4 or 5 years ago, but they are genuinely unable to catch up at this time. Nevertheless, he disclosed that he thinks Tesla has a vulnerability, which is its greatest risk element. Many would immediately infer that he was talking about the allegedly inflated Tesla stocks, their business, or perhaps a technological glitch. Barron Musk's health is the main risk to Tesla's future, it seems. The largest risk we face, in my opinion, is to his health. Barron mentioned that he works 19 hours a day and sleeps 5 hours. The risk for the near future is that we cannot dispute that Musk has played a significant role in Tesla's success, even though some people may think this is less significant or unimportant. When Tesla novices learn